Mr. President, families and businesses across the country are worried about the safety and stability of our banking system. 2 weeks ago, Silicon Valley Bank, a bank that many people had never heard of, rocketed from relative obscurity to infamy when it suddenly and unexpectedly collapsed. The bank, which reported $212 billion in assets last quarter, is now known as the biggest bank failure since the 2008 financial crisis. It's the second largest bank failure in American history. Well, the American people quickly learned that Silicon Valley Bank had made some pretty risky investment decisions. When interest rates were low, it purchased long-term Treasury bonds and mortgage-backed securities. As the Federal Reserve raised interest rates to fight record inflation, the value of those investments tumbled. SVB attempted to stop the bleeding by selling $21 billion worth of assets at a loss of nearly $2 billion. Well, it didn't take long for this entire house of cards to come tumbling down. When customers learned about its financial troubles, it caused a run on deposits. And of course, no bank can withstand a run on its deposits where people demand to get paid back immediately when many of the investments that were made are longer-term investments. Shortly after the Silicon Valley Bank implosion, Signature Bank, a regional bank in New York, collapsed as well. And now, major banks have pledged to help rescue First Republic Bank from potentially succumbing to the same fate. My assumption is this isn't done out of the goodness of their heart, but they realize that if this contagion continues to spread across the country, it could imperil our entire economy. Given the potential implications of this situation, the administration and federal regulators quickly jumped into damage control mode. The Federal Deposit Insurance Corporation, otherwise known as FDIC, quickly announced that depositors at Silicon Valley Bank and Signature Bank would have full access to their funds, even above the uninsured deposits, even above the insured deposits.
Hello, friends. Happy Wednesday to all of you. Lawmakers are finally considering more stimulus checks, and you may automatically qualify for at least one more inflation relief check that is worth $800. The Federal Reserve also just announced changes to interest rates, and this could affect many monthly bills and expenses. My friends, please make sure that you watch until the end of this video. Also, in 2 days, I will be announcing 2 more winners for the Walmart gift card giveaway. If you'd like to enter the weekly giveaways, please make sure you click and like several of my videos, and then comment below the keyword of each video that you watch. My friends, the more videos that you watch and then comment on, the greater your chances of winning the giveaways. Today, the Federal Reserve raised interest rates for the 9th time in a row, opting to continue its campaign against high inflation, despite stress in the banking industry. This is following the collapse of 2 regional banks. Fed policymakers voted unanimously to raise their benchmark interest rate by a 1/4 percentage point to just under 5%, which will make it more expensive for people seeking car loans or carrying a balance on their credit cards. Members of the Fed's rate-setting committee believe slightly higher rates may be necessary to restore price stability. On average, policymakers anticipate rates climbing by another 1/4 percentage point by the end of this year. Some observers had urged the central bank to pause its rate hikes, at least temporarily, in order to assess the fallout from the collapse of Silicon Valley Bank and Signature Bank earlier this month. However, stress in the banking system has appeared to ease in recent days. U.S. Treasury Secretary Janet Yellen said on Tuesday that large withdrawals from regional banks have stabilized. Meanwhile, consumer prices continue to climb at a rapid rate. Annual inflation in February was 6%. That was down from 9.1% last June, but still well above the Fed's target rate of 2%. The central bank is especially concerned about the rising costs of services, such as airline tickets and streaming TV subscriptions. The Fed is also facing scrutiny for its oversight of the two failed banks. Fed supervisors reportedly identified problems with Silicon Valley Bank's risk management practices years ago, but the problems were not corrected, and the California lender had to be taken over by the U.S. government after suffering a massive bank run. The Fed will need to weigh the impact of the collapse of the two regional lenders in deciding how much to raise interest rates going forward. Since the collapse of Silicon Valley Bank and Signature Bank, other banks are expected to be more conservative about making loans. But still, Fed policymakers are not projecting a recession. On average, members of the rate-setting committee expect the economy to grow 0.4% this year. They expect the unemployment rate to climb to 4.5% from 3.6% in February. So, dear friends, what are your thoughts about our banking system? Please let me know what your thoughts are in the comment section below. Also, friends, there is an update on inflation relief payments. Alabama Governor Kay Ivey has just officially proposed one-time tax rebates of $400 for individuals and $800 for married couples, as well as 2% pay raises for teachers and state employees. The Alabama governor submitted the proposed spending plans for the fiscal year that begins October 1st to lawmakers as they resume the legislative session. The lawmakers will debate the legislation over the next several months, likely accepting some of Governor Ivey's proposals and rejecting others. Recently, Governor Ivey said in a statement, "Just as every Alabama family budgets to invest, pay their debts, and increase their savings, these budget proposals do just that for our state. From returning taxpayers' hard-earned dollars back to them to making historic investments in students' education." Legislators this session face decisions on what to do with the rare surplus, including how much to save and how to spend the rest. The proposed tax rebates, which Governor Ivey first announced in her State of the State address, are about double what some lawmakers initially had discussed. The governor's rebates would be limited to individuals who filed state income tax returns. Officials have said that was the most efficient way to provide the rebates. People who earned under $4,000 a year and married couples earning less than $10,500 do not have to file returns. The Alabama governor has proposed pay raises of 2% for state employees and for educators. This is an effort to provide sustainable pay raises while also increasing their pay. There's an update on inflation relief in Pennsylvania. In particular, Pennsylvania is offering relief checks to low-income homeowners. If you are a Pennsylvania resident of at least 65 years old, then you may be able to apply for stimulus payment through the property tax and rent rebate program. The annual income limit is $35,000 for homeowners and $15,000 for renters. Also, friends, it is important to note that 50% of Social Security benefits are excluded, as well as a reduction to 70% of any 2021 rebate on property taxes. Well, my beautiful and most amazing friends, that is the end of my daily stimulus update video for this Wednesday. Thank you, dear friends, for being part of this community and for joining me here every single day. I will be announcing 2 winners for the Walmart gift card giveaway, which is scheduled for this Friday. Please make sure you enter the giveaway, friends, by clicking and liking several of my videos, and then comment below the keyword of each video that you watch. My friends, the more videos that you comment on, the greater your chances of winning the giveaways. Thank you and have a wonderful and very blessed week.